Hey everyone, top of the morning. So as we get ready for the hot of the press CPI data on Friday, June 10th, here is what most of the analysts and economists are predicting. So there are three supply side metric sectors that drove the inflation to the next level over the last year, and which of course led the inflation at 40-year high. But now these three sectors have cooled down and are coming at normal level, which is suggesting that global inflation might have peaked. Might. There's a huge but over here. Let's take a look at these three sectors and also some more data to come to our final conclusion. So I'm going to start basically talking about these three sectors. Sector one, chips. The price of chips, which are semiconductor, is going down as a result of the semiconductor chip shortages easing across different industries. In the smartphone and personal computer industries, semiconductor shortages are likely to ease as per the report from Bloomberg in the second half of 2022 despite China lockdown. The auto industry also said that semiconductor chip shortages is finally receding. I mean, Mercedes-Benz, Daimler, BMW, they all have said that they're getting the high-tech components to produce at full capacity after months of outages or basically shortages. Sector 2 is shipping. In the shipping, the Drewry Shipping Index, which basically monitors 220 ports around the world, has decreased marginally each month since September of 2021. Last week, I have the data over here, Drewry World Container Index fell by 0.1% to 7,625.56 per 40-foot container, while still 18% higher than the same week in 2021. So of course it's higher, it's not where it was back in 2021, but it fell by 0.1%, which is very less. In the long fall, or of course, before it was at $10,400 per foot 40-foot container price, which is a mouthful, seen in September of 2021. So in the latest note on June 2, the price tracker noted that Drewry expects index to decrease slowly in the next few weeks. So they are seeing the supply chain ease or basically slow down in the world as they move the goods around. And the last sector, which I want to talk about, is fertilizer, which of course we don't talk about it that much, but it's a very important metric. So fertilizer prices have plunged following the demand destructions as buyer, of course, they get tired of the soaring prices, and that's where the talk about recession, talk about, the high peak inflation is coming. The June spot price in Tampa, Florida for a nitrogen fertilizer is right here, is at 1,000 per metric ton, a 30% drop from May 1,425 per metric ton according to the green market. Now the green market's North America fertilizer price index shows price falling from 1,269 in early April, which was just a month and a half ago, to about 885 this week. So from 1,269 to 885 this week. The price of the fertilizer, of course, impacted the availability of the global food supply, which was up around 80% in April compared to the same period 2 years ago, according to the World Bank Food Commodity Price Index. So while inflation in some part of the world are yet to peak, but at least there are some signs emerging that we may not be too far in terms of turning point at which we start to see the annual inflation rate start to head lower, which is going to be bullish for stock. So, of course, we are not out of this rut, as I just mentioned in my last video, but the CPI number that we are going to get on Friday will at least give us some direction on what to expect as we head into the second half of 2022, which by some economists is going to be good for the stock market. The upcoming CPI report is going to be critical, so definitely subscribe to the channel as I break down the report and also share my game plan as we head into second half of 2022. Now, there is a very smart viewer who commented on my last video, which I wanted to share with everyone. The comment make complete sense, and that's why the report that I just shared with you talks about that we might be pairing and that or peaking. So that word might is very important, and we need to pay attention to that. So take a look over here. So this is the person's comment, and if you can see it, I'm gonna make it bigger. So this viewer right here, and I'm sorry I didn't take your permission, I just kind of shared this, but this kind of makes sense. So it says there are two scenarios. Number one, probably CPI comes in hotter than expected. White House warned today that might happen. Fed keeps the hawkish tone. We see another move down to 3,500 SPY on the cards. Now, this, in my opinion, I agree. I mean, this is, we all are expecting CPI to head lower, and we all have said that CPI peaked last, I would say, month. And the data that I shared also suggests that. But there are so many other sectors that make CPI. And if all those sectors come out and they give a harder number than we first initially expected, the Fed is going to get more hawkish or keep their hawkish tone, and market is not going to like it. That means there are more rate hikes this year, as some of them were saying that September could be the last rate hike. But if the CPI comes harder, there's a possibility. Second, over here, unlikely, the second scenario is unlikely. CPI comes in positive as expected or lower than expected. Market starts rallying as Fed pauses after June and July rate hikes, and we start slowly recovering from here. Also be careful, last month the CPI report was bad, but stocks did a fake out rally for 2 free days before market dumped to new lows. And this, just, I would say, screenshot this comment. This is really smart. I mean, this person really did the whole thing in like 2 lines, which the feeling that I have that what's going to happen. So in my last video, I talked about how we are going to see these fake out rallies because we are not out of this stock market slump or the rut that we are in. And it's going to take more than just one CPI report for us to push out of this. And I feel that we are going to see the pain in the market. As the rally that we are going to see, take full advantage of it. Don't sit on the sideline thinking, should I just do and my opinion, that's what I'm going to do. Should I do a covered call maybe on my position? No. I would say any chance we get to make money and lower our average is what we all should be looking at. Because the rally may last for a week, may last for 3 days, but then the reality will sink in because people are going to slow down. The economy that we are seeing, the data that I shared with you all about how we are going to, or how the credit card spending is basically declining, while the transactions are less, but the balances are high. And that's where the main issue is, because if the transactions are less and the balances are high, that means people are not paying off their debt that well, even though they have money, because they're scared. They don't know what's going to happen in the next few months. So I feel that we are going to be, tomorrow, the CPI report will give markets some direction to basically behave or how to behave in the coming months. And it's time is coming, like, or the clock is ticking for me personally, because I said I'm going to buy in the middle of June, and it's happening now. And CPI was one of the things that I was looking forward to decide that is this the right time, or do I need to wait a little bit longer to pull the trigger on some of the buys that have been waiting and sitting on the sideline. Oops, and I go out of focus. There you go. Okay, so again, if you like the video, then definitely subscribe to the channel, because after the CPI report, I'm going to break it down, and I'm not going to come out and just make a quick video. We are going to analyze the report, because this is one of the most CPI report that we are going to see in the coming months. So thank you so much for joining. Hope you liked the video. And for more one-on-one conversation, consider joining our Discord and Patreon. Links I've given in the description below. Thank you so much again. Until next time, you all have a sparkling day.